Hey, Wealth Warriors, are you ready to redefine wealth and master your money mindset? Welcome back to Women of Wealth. I'm your Gen X host, Holly Woods Gray.
And I'm your millennial host, Ali Ramo. Today is the definition of a woman who has not only built wealth, but helped shape the systems behind it. We're joined today by Kimberly Flynn, president and partner at XA Investments. She's spent her career developing investment products, raising billions with a B in capital, and operating at the highest levels of finance, from Morgan Stanley to Harvard Business School to leading innovation in alternative investments today.
What we're really excited to dig into is how she built her voice, her credibility, and her seat at the table in rooms where women have historically been underrepresented. Kim, welcome to Women of Wealth. We're so glad you're here.
Thank you so much for having me today.
Can you just give us a background? What's your story? How did you get here today?
Well, I've always been focused on financial services, and I started in investment banking because it was the most competitive opportunity coming out of college, and found out, pretty quickly that wasn't really um, uh, as much fun as it sort of builds, in Hollywood movies and whatnot. So, um, I realized that to sustain a career, which is what I wanted to do, over 25, 35 years, it needed to be some area of the capital markets where I could learn. And I've always loved writing. And I found that many of my fellow finance grads and mostly they were male coworkers, they were focused on different things. And so I decided that I wanted to apply that area of interest in terms of my writing ability. And I started down a pathway of becoming an equity research analyst, and realized that it was actually a very lonely, sort of studious type of role. And I very much enjoyed some of the sales and marketing aspects of investment banking. And so I really found a home post business school. When I graduated Harvard Business School, I moved back to Chicago and worked at Nuveen Investments. And Nuveen was one of the leading asset managers in the Chicago area. And being well rooted, I had the benefit of learning from wonderful mentors. And I spent 12 formative years there before I decided to break out and do something entrepreneurial. And I think many women have this experience where you consider, leaving your firm or trying something new. And I went through a process of elimination and decided that I was better working for myself and building something on my own, despite the cost and the risk of doing it. And I found some business partners to build XA Investments. This was 2016, so we actually just celebrated our 10th anniversary. And not all asset management firms, make it. It's tough to do. And this is one area of entrepreneurship where you're not really permitted or allowed to talk about being an entrepreneur, because I would say it's probably frowned upon if you're giving your hard-earned retirement dollars to an investment firm. You don't really want to be reminded that the firm is, a new outfit, if you will. So we have created a business that's largely focused on private market investments. So think private equity or real estate or farmland, private credit, you name it. And our business is both, we have a fund business where we manage our own funds, but we also have a consulting and research practice where we help other private market managers enter really the retail marketplace, and firms that are trying to serve individual investors. We help them figure out how the best way to do that.
That's awesome. So I was reading a little bit about you on your website, and it seems like one of the things that you have some expertise in is EFTs. Is that what they're called? Sorry, I don't know much about them. That's why I'm asking you this question. ETFs and other alternative investments. How do you become more experienced on those types of products, so I even know what someone's talking about when they come up in conversation?
Well, I think that there's a lot of, it's sort of acronym soup when it comes to some of these investment products. So you're like many other people. Exchange traded funds, or ETFs, have become quite popular in terms of getting diversified, investment exposure, maybe across like a technology index. So that would be like the NASDAQ 100. There are many exchange traded products out there. And now the mutual fund business is actually being, in some ways, not replaced quite yet, but the market share for mutual funds is being encroached upon by exchange traded funds, simply because these types of products are easier for individual investors to buy and sell. It's easier from a tax perspective. And we work in an area of another type of SEC registered product. This is important because as an individual investor, it's helpful that the SEC reviews all of these products that are being put in front of retirees. And as opposed to, there are plenty of private funds or private investment opportunities that you might consider. And many of those private funds have not gone through an SEC registration process or examination. And so in most people's 401ks or 403bs, you're talking about mutual funds, and that's largely what is viewed as a safe place for retirees to invest. But in the world that we're focused on, it's trying to give investors access to something more than just stocks and bonds. Mm-hmm. And so I think it's easy enough to buy, a listed stock, if you're a Fidelity customer or a Schwab customer, or maybe Robinhood. My 18-year-old son just set up a Robinhood account in less than 10 minutes. Yeah. But it makes things that are exchange traded stocks, exchange traded funds really easy to trade intraday. And I think in the world that we live in, that now is so tech forward, that ease of investing is being enhanced by some of these investment platforms that are spending a lot of technology dollars, improving the investor experience. So all of those firms have terrific resources in terms of education, in terms of getting you familiar with different product structures or different asset classes. The other resource in the world that I sit in terms of alternative investments in private markets, a lot of these firms like Apollo or Blackstone, large reputable alternative managers, they have something like Apollo calls it Apollo University. And so they have training for financial advisors, educational resources for individual investors. So there's a lot more in the last 5 years that has been made available and consumable for individual investors. 10 or 15 years ago, if you went to a hedge fund's website or you went to a private equity fund sponsor's website, it would be password protected. You wouldn't be able to find much information. But now these firms realize how significant the individual investor represents in terms of growth. And so these firms are all spending a lot of time and investment growing their sales and distribution, specifically in what they call private wealth or retail, effectively retail, and education is a big part of that.
Yeah.
So you had mentioned you were, you work with farms, tech, different industries, and I'm curious, as we see this shift in baby boomers, selling their businesses, and this shift into more tech heavy companies. What kind of trends are you seeing happening in either like investments or just business shifts?
Well, I mean, a lot of the asset managers are starting to use AI or enhanced software on the investment decision-making process. So, a lot of these firms have used quantitative methods of research, but now they're using AI as a tool into the investment process. I'd say the biggest impact for anybody that has sons or daughters graduating with finance degrees is there's less job opportunities for first-year analysts at investment banks or first-year analysts in asset management. So I think that'll work its way out. But this industry, asset management, investment banking, these are apprenticeship type careers. And, we need to keep the pipeline of talent, coming. So I think technology is going to have a big impact. We use AI in some of the consulting work that we do, we use, we've actually created for all our consulting client a captive AI that allows them to do queries and ask questions to get to the answers faster in terms of the specialized research we provide. So I think that we too, like a lot of people, are experimenting, figuring out what things can enhance for us the sales side, but what can also enhance the efficiency side of things. We took the opportunity at my firm to hire a couple off-market graduates who had graduated college because, frankly, there was a lot of talent that's out there because so many of these young people graduating, that there are whole recruiting cycles being passed up. So I think that what an entrepreneurial organization can be nimble in terms of hiring somebody maybe in November or February. A lot of these bigger asset managers, they have an annual cycle. They only bring people in June or July. So if you can be nimble and dynamic, you can pick up some talented people. And so that's sort of at odds with the technology. I'd say that within private markets specifically, I've heard the most interesting applications of use of AI is basically in scouring data and in terms of big, so in terms of like looking over quarter, using that data and analyzing trends over time. And so some of the tools that our private market managers are using is it, different than the tools that they had a few years ago. So I think it just allows analysts to hopefully make better investment decisions and using less resource than it did in the past. And hopefully that means better performance for investors and lower expenses for end investors as well. So we'll see how that evolves.
And so I've been seeing a lot of AI tools for, financial management and whatnot. And of course, I'm a little weary of that, obviously, because I've been in the industry now for 15 years, mostly on the insurance side. So our niche market is we help educators, and we go in and we show them how their pension works, and we have products through their 403B to help them fill their income gap. And so coming from that kind of vein, AI and some of these companies that are popping up that are like, invest $20 and see what happens, let AI manage it. And I'm just like, oh boy, here we go. Right. Here we go with this new way that people are going to start having questions around their money because they put it in an AI account. Are you finding that people are taking that serious? Or are you finding that there's a lot of misinformation in AI still around your specific financial company?
Most of the investments that are private markets focused, you have to have a financial advisor to get access and to make the investment decision. There's not a lot of ways like direct to consumer. With crypto, anybody can buy, any one of the coins. But in the registered fund space where I work, especially when it comes to private equity or things where there are suitability restrictions, sometimes you have to be an accredited investor or maybe a qualified client. There is an advisor there to provide advice on the front end, to make sure it's appropriate for you and to make sure that your time horizon is consistent with the investment. So I think that at least in terms of the way private wealth is managed in the US, most of the assets in America are in the hands of financial advisors, either
Right.
large wirehouse firms, as you know, or individual financial advisors. And that's different depending on the country that you go to, right? Europe is very bank centric. Most people's retirement assets are held at the bank. But here, in this case, I think it's protective. When my son wanted to set up a Robinhood account, I think that was a good way for him to dabble, learn a little bit about investing. But ultimately, if you're working full time and you have responsibilities or you're building a business, it's helpful to have a tax advisor. It's helpful to have an investment advisor to guide you, address your questions, and help you make some of these investment decisions. And there are really interesting opportunities. There's a ton of private equity, especially technology focused companies that have a bent towards AI, but there's a lot of losers among the sort of select winners. So we always talk about the dispersion of returns is quite wide between the winner and the loser. And so you need to be well informed, you need to be well advised to get some advice on determining who the winners are. Because like, the hit ratio with venture capital, there's many more investments that people lose money on. And then there's the unicorns that people do make money on. And so diversification is your friend, but also having a financial advisor who can provide guidance and input is really critical.
Yeah, absolutely. We always talk about, I belong to a couple women's organizations as well. eWomen Network is one of the big ones. And I always talk about how my husband's a financial advisor. However, we also have somebody that helps us with some unique and alternative strategies that is different than what he does. He does, pretty much black and white mutual funds, all that for our teachers and some of his private clients as well. But for the most part, like if you make a lot of money one year, maybe you want to look at an oil and gas fund, and in financial services, sometimes your income can fluctuate a little bit. And so you want to make sure that you have those options available so that you know what tax savings you can take advantage of. But having one person or a team of people is, as a business owner, a team of people is going to give you a much better way to find those and identify those places where you could save money in taxes or whatever the case might be. So, having our CPA work with our financial advisor in that situation is something that we really have to call on, because sometimes even CPAs don't know how to credit the taxes that are available through some of these funds.
When you're working with clients, are you working on the investor side, like small investors, large investors, everything in between, and connecting them with investment opportunities? Like what does your day-to-day functions or your company's functions look like?
Sure. So we have registered funds and we host, for example, quarterly webinars so that the investors have a chance to talk to me or to talk to the portfolio manager. I run the business, but we hire portfolio managers who run the investment portfolio, and they often want to hear from me, but they have questions for the investment team. So we found that the best way to reach the most number of people, is we have thousands of investors in any one of those registered funds, is to, rain or shine, good times or bad, get in front of people with webinars. And that way we can be thoughtful ahead of time in terms of like, what are the topics that are on people's minds today? If things are not performing, you need to address, that underperformance. And then from time to time, I make my information available on our website. So I do get calls and emails, and I end up spending more time talking to larger institutional investors. And frankly, I do spend a lot of time with financial advisors at UBS or Merrill Lynch or Wells Fargo. Sometimes, because our products are income focused, you get do-it-yourself income investors or retired investors, and they because our funds, some of our funds, two of them are exchange traded. They can buy on the exchange, and I don't actually know their name until they call me. So it's always welcome to hear from those individual investors. And I think sometimes, it's sometimes people just want to be heard to the extent that they have a concern or that they have questions. And oftentimes there's advice relayed, or you should do this or you should do that. And that's really welcome too. You need to have open ears to those types of investor calls. And so, yeah, it really runs the gamut between individual retired investors, to financial advisors, up to institutional buyers. And as you can imagine, the things that they're concerned about are actually kind of different. And, you don't get a lot of calls when things are working. It's when things, like we've had a lot of volatility in the credit market more recently. And that's when your phone starts ringing off the hook, and you've got to be available to take those calls.
So you were talking just a moment ago about kids coming out of college or college graduates. I call them kids because I feel like I'm so much older than them now, but college graduates, and that some of these entry-level jobs aren't available anymore because maybe AI is taking over some of those research jobs or whatnot. what would you recommend? Because we do have a lot of women, listening that have kids that are getting ready to go to college or maybe get done with college. And if they've focused on these majors and maybe there's not as much in the financial industry for them, what would you recommend that they maybe take some classes on or get certificates in so that they could be employable right out of college?
Yeah, I think, I even see this with my own children, which is that I think there's a reluctance sometimes to do unpaid work. But if you're there to learn and you want to apprentice in an area, you should use whatever opportunity comes your way in terms of getting your foot in the door, because nobody asks you if you were paid or unpaid. They just want to know that you can have a conversation around a particular topic and you've demonstrated interest in that area. And so I think that I appreciate that it's sometimes students will come to us. We're in Chicago, so we have a lot of great universities. They'll do a winter internship, so you kind of make the time for it. Those students that are in school that are also working with us are only usually doing about 20 hours a week, but it's a great entree to then doing something full time. I've always done summer interns, but sometimes 3 months is not enough of a test drive on a candidate, because especially if you're in a very niche field like working in private markets, you can't tell in 3 months, are they going to be good at this, or do they like this? It's just as important that the person enjoy the work as it is that they are competent at the work. So I think sometimes I think back to some of my most successful hires. Two of them were Loyola Chicago grads, and they demonstrated how hardworking they were, because they were able, and they were also very diligent because they were working while in school, and that really set them up. And I think a lot of young people, they wait for the summer to do it, or they wait too long to line up these opportunities. And so yeah, I think trying to use your network, or trying to use your either your high school connections or your college connections. People will usually open doors for people that they know, and this applies just as equally to men as it does to women. And frankly, in business, a lot of the college programs require both men and women to decide while they're in high school that they want to go into finance or go into accounting. And I think a lot of women are actually late in making that decision. I went into college thinking I was going to become a doctor and go into science, and then switched later. So it's unfortunate that some of these college programs force you to decide while you're a high school senior. So I think that people's careers now are more of a sort of matrix approach, meaning you can move to the left or you can move to the right. Not everything is a ladder. And if you're open-minded in that way, I think the most important thing is to do something that you're passionate about, and work hard and in a focused way, demonstrating that you can do that. Because there's a lot of people that have good resumes, but that's going to come across in an interview that you're committed and that you're a hard worker. And I think that age-old quality of sort of demonstrating that you've got grit and focus will go a long way, and is helped me tremendously in my career. So I know that it is more challenging than it used to be. And so that's why I would say be open to unpaid internships or shorter externships, or frankly, just job shadowing. There's plenty of people that will let you shadow for a day or two, getting to know what the day in the life of someone, and that gives you something you can talk about at the next interview. So these are all just ideas. It's not that everything has to be an internship. There's lots of ways to get your foot in the door.
Sure.
Yeah, and you had spoken before we started recording about, being around a lot of men and having mentors as men. As a woman, did you ever feel you had to work extra hard to be credible? How did your experience moving up, and I mean, working at Morgan Stanley, Nuveen, and now being an entrepreneur, how has building that credibility progressed?
Yeah, I would say I guess I've been very lucky because I've been mentored by wonderful men who've taught and shared knowledge with me, and I think the only challenge that I see, especially in the beginning, I think men and women are in banking roles or accounting roles in sort of equal numbers. I think it does. You start to feel different pressures as you become more senior. Um, and I think men and women are viewed differently in leadership roles. Just frankly, just given natural differences in terms of how men and women behave. So I think that I think you always have to be open to learning, not just how do I become a better manager or better leader, but also being open to sort of the reality that women are going to be perceived differently than men, and knowledge of that is helpful. I'm not saying like be a shapeshifter or change who you are, but you do have to appreciate um, it's just when you say certain things, it's going to come across differently than when men do. And frankly, you may get negative feedback, and you kind of have to have thick skin. I know a lot of women suffer from imposter syndrome, and I was reading about the astronaut that just circled the moon, and she was saying that she struggled with imposter syndrome. I've not read up. I don't really know what it is. I don't really struggle with that and never have. And maybe because I was one of three girls, my dad just treated us, the same, and pushed pretty hard. My parents both pushed pretty hard. I think a lot of women grapple with different things than men do in their career. And sometimes it's, being married with children. Sometimes it's being, a single mom. These are all things that men and women experience differently as leaders. And I think it is the first 10 years, it's important to put your head down and work as hard as you can, because it gives you a little bit more flexibility as you get more senior. And I've really benefited, my children and my husband, we've all benefited from the fact that, you want to take advantage of those opportunities, but this is a marathon. This is just not a sprint. So I've always viewed success as if I can sustain it. And, nothing is sustainable if you're working 100 hours a week. It's just not. So you also have to figure out, if you love what you do, and you can be it, you're really effective at it. I think people can find a lot of success without having to work, nights and weekends, which can really burn people out.
Well, I have found, especially as I've been more senior in this business and also working side by side with my husband, I feel like women do a better job of maintaining their relationships. Not all, but I mean, this is pretty general. Just looking around my friend group and looking around the women that I spend time with, it seems like women do a better job of managing and nurturing those relationships and still being successful at work than men do. It seems like men get single focused on like whatever their job might be, and maybe at home sometimes those relationships aren't as nurtured. I don't know. It just seems like the women that I know that are successful, a lot of them are married and have families. A lot of the successful men that I know, they either have been divorced or on, a different marriage, and so, or are single. And so it's just a very interesting thought process as I start talking to more and more successful women. I really find that it seems like women do a better job of managing that. But I don't know. I could be completely off base. I know at least on the entrepreneurship side, maybe not like corporate America. I don't know. Been so out of corporate America for so long. But I do still see.
I've heard that said about moms, because moms, you sort of have a built-in juggling act. And so
Yeah.
I've heard that moms make better entrepreneurs or business owners, just because you sort of get really good at that. I call it adaptive priorities. That's how every day there's a new priority, and it may not have been what was yesterday, but that's okay. Sometimes they change. And if you're really, anal retentive, and you plan weeks in advance, sometimes, life will disappoint you. And I like to kind of keep my expectations low, and be as flexible as I can, as I find that there's more joy in that, right? Because then I'm not upset, you're not disappointed, stuff happens and we just kind of have to keep going.
Have a plan, but be flexible for it changing. I mean, that's
That's
what
right.
moms do all the time anyway. Okay, so let's just talk about we're going to jump into our lightning round here in just a second, but let's talk a little bit about what you've seen change for women in finance over the years and what still needs to be changed, in your opinion, for more women to find success in finance.
Yeah, I mean, I think the one major thing that has changed in the last 25 years is probably the sort of remote work, flexible work. But I have a little bit of a contrarian view on it. So I can understand how, um, for a lot of women, working remotely or working in a flexible work arrangement where you're not in the office every day really opens a lot of things up. But maybe I'm just I like to compartmentalize my life. I like to have my home life and my work life. And so I think that's a big change. So for some women, that's a huge advantage, because you have much more flexibility if you're doing that. And then there are a segment of the workforce, men and women, who will self-select into roles, into jobs, into companies where you can have that remote flexibility. Having lived through COVID and as a manager, I found it particularly hard. Now, if my organization maybe was set up differently, or if you had like HR and tech functions that really facilitated it, I think as a small entrepreneurial organization, it was a lot easier to manage the business. Because what I found was that individual people on my team, it was all point to me. Everybody was communicating with me, but they weren't communicating with each other. And so it was overwhelming, as a manager during that time, because it was the communication flows, that we had naturally when we worked in offices next to each other. Just the short conversations, were hard to replicate, at least for the work that we did. So I think that's a big change, and I think women can use it to their advantage, to the extent that they prefer that. But I think if you don't really know what you prefer so I would encourage people to try it both ways, right? Because the worry that I have for young women and for young men is that if you're working remotely, there's a learning, and mentorship potential that may be missed. And a lot of the mentorship that I received was like a quick, let's go grab coffee or let's go grab lunch. And that, informal mentorship was really, really valuable. And so that's going to slow people's career, the upward move in people's careers. So I think that's the biggest change. And so just be very conscious of your personality, but definitely try it both ways and give it enough time, because I think what you don't want to do is work remotely and then figure out, well, I'm not getting promoted, because I don't have sufficient face time with my boss or with my manager. So that's sort of a medium term experiment that we all have going on right now.
Yeah.
Yep. And I started working with our agency around those COVID times where I was Holly's assistant first in 2020, and that's when everything went virtual. But then when I got my license and was meeting with clients, people were starting to go back, and I found back into schools, back into offices. And so I found it beneficial as learning for me to be in an office, at least having our meetings on Mondays and Fridays in person, to have that team training environment, rather than being at home, being on a Zoom call Mondays and Fridays. But that human interaction on Mondays and Fridays, even though we're hybrid now, but even just meeting with my clients, it's a different type of rapport that I can build when I'm sitting right next to you rather than on a screen. So I usually do all of my first appointments in person, and then anything after that, I will meet virtually. But that's because I have the beauty to do that. Not sometimes I have clients that are in different areas where everything is virtual. But I do see the value of having that in-person interaction for mentorship or learning. and can see how that could slow someone's career progress for sure. We're going to go into our lightning round. So I'm going to ask you a few questions that require either one word or just very short answers. So the first one is, what's one word to describe your leadership style?
I would say innovation focused.
Okay. Coffee or tea?
Mint tea.
Mint tea. What's your go-to productivity hack?
I like getting ahead of my calendar,
Hmm.
planning, tomorrow, but also a week at a time. And I find people need to look out more.
Okay. Like look ahead.
Yeah, anticipate what you're going to need. So it reduces surprises, it reduces scrambling. Because if you have a week, everything is manageable and you can delegate it. But if it's tomorrow, then it often falls on you, the leader. So that's why I try to look out, because you don't want to jam job anybody. You want to give them time. And that's why I try every day. It's like every day you try to think about, what do I need for tomorrow? What do I need for next week? And that way you also run into then you realize, oh, I've been double booked. But instead of bowing out, a few minutes before, which is not very professional, you can reach out and say, hey, do you mind if we reschedule, which is sort of normal course. That's why a lot of young people that work for me, I try to get them to look out, because they're so laser focused on today. And if you don't lift your head and look out, it becomes a bit of a grind, because then everything is sort of an emergency if you're not planning ahead.
Yeah. What's your favorite business book or podcast?
Relevant to this topic today, there's a book called Likeable Badass by Allison Fragel. And I read this book. It reads very quickly, but it actually helps senior women, regardless of what field you're in. It helps women who are then perceived maybe differently than men in similar positions, how you can sort of approach and own sort of excellence in your field. Don't shy away from it. But it helps. The likable part is the interesting part. It encourages you to own your strengths and your position of power, but be aware that you can do it as an arrogant jerk, or you can do it as a likable, friendly sort of person. But Allison does a great job in that book. So I would encourage everybody it just got published last year. So I think it's about a year old.
Awesome. I'll have to check it out. What's a money myth that you wish would go away forever?
Well, I think that the sort of old investing in equity mentality, meaning equities, stocks are the end all be all. If you're an endowment or a large institutional investor, you've long invested in things like real estate, farmland, private equity. There's so many opportunities for attractive returns and risk diversification. Public equities are actually quite volatile. Yes, there's a lot of upside from equity investing, but equity markets can be volatile and there can be downside. So I wish that the average American would look, and frankly, the average financial advisor, because it's a lot of it is reinforced by financial advisors. So most Americans are heavily overweighted to U.S. Stocks, and they don't even have sufficient fixed income diversification or private markets diversification. So I think that there's a lot more. Everybody knows what the S&P 500 is, but there's a lack of awareness or familiarity with some of these other investment opportunities, which is why, to Holly's point earlier about why there's a lot of media and marketing around crypto investing or AI investing, and it catches your attention. But whether or not it's appropriate or suitable is another matter. So I think having a more diversified portfolio with public and private investments, there's plenty of ways to participate in companies staying private longer. but I would do it in a diversified way. We don't want people losing money on a speculative investment or something that may even be, not on the up and up. So that's why I say diversification, but do it with the help of a financial professional.
Awesome. And if you could sit down for lunch or tea with any woman of wealth from the past or present, who would it be?
Oh, well, this one's easy because I've got the Queen of England, Queen Elizabeth, and then I've got Queen Margaret of Denmark, but she just abdicated to her son. She's still alive, so I would love to take tea with both ladies. But I was traveling in Europe at the time before Queen Elizabeth passed away, and it's really interesting. I'm a student of history, and studying the monarchy is fascinating. But having two women long reigning monarchs was sort of a first for England, but also for Denmark. So I found it fascinating, and that's actually Queen Elizabeth's biography is a really terrific. If anybody's watched the Crown series, it actually is based off of her approved biography. So yeah, that would be fascinating to learn the lessons of leadership from those ladies.
Yeah, absolutely. I love that. I'm fascinated by that too. So how do people get in touch with you if if they have questions or they think that you might be a good fit for their business? How do people reach out and work with you, Kimberly?
Sure. So we've got a lot of information on xainvestments.com. And you can reach me at kflynn@xainvestments.com. But we've got a ton of educational resources, and I would encourage people to go to the website. I'm also very active on LinkedIn, and I post usually 2 or 3 times a week. It's all focused on private markets education. So you can follow me at Kimberly Ann Flynn on LinkedIn.
Perfect.
Awesome.
Well, thank you so much for taking the time to educate us and give us your expertise. We really appreciate your insight and experience.
Yes, thank you so much.
Absolutely. Thanks for having me, ladies. Great to meet you.
Nice to meet you too.